Hello, hello. What up, traders?
My man.
Got a lot to get into today, as usual, so let's just start things off. I guess I'll begin with a quick overview. Nothing too crazy in currency markets today, but obviously we've seen a lot of volatility in the last couple weeks, and really in just markets more broadly.
Totally.
But DXY today, relatively flat. Pretty much everything relatively flat. Like I said, nothing too crazy, but DXY has taken or just dollar pairs in general, but the DXY has taken a huge dive, mostly off of all these, I guess call it positive inflation numbers. 7.7% came in for headline, which was a 30 basis point surprise to the downside. So apparently 7.7% is a good thing now.
Right.
We also had PPI numbers, the producer price index, another inflation measure for producers, came in surprising to the downside. And just overall, inflation has been surprising to the downside, signaling that the Fed maybe will let off the tightening. And so that's what we're seeing, stuff like dollar pairs, take a dive, essentially. But let's go ahead and jump straight into things. Start off with the DXY, as always. So you can see, all of this downside move is pretty much on the back of these inflation numbers, just because the market is saying that, as long as if the Fed isn't going to be raising rates as much or whatever because inflation is easing, then, the dollar is not going to be gaining as much, presumably. But we'll see, because the Fed is still talking about getting to a higher terminal rate overall. So who knows? I still think that this is very possible that this is the dollar top. Just with inflation now coming down, we're getting, granted, it is just like one print, so the Fed is going to want to see multiple coming through, but at the same time, it does seem like this very well could be the top temporarily. Maybe not long term. If you subscribe to Brent Johnson's dollar milkshake theory, he definitely thinks it's got a lot longer to go.
Not crazy.
But again, in the short, medium term, I think this very well could be the top. Doesn't mean we won't see some sort of rally up into this general region, given the Fed is still somewhat hawkish, saying that they're going to get to a higher terminal rate overall. So that might lead the market to kind of be like, oh shit, maybe we overcorrected to the downside and then going to move back up. Who knows? So I would still be eyeing some sort of pullback, but I, just given the data that's come out recently, I would be more willing to fade any rallies, maybe into this supply or up into this supply. But who knows? We'll see. Obviously, got a long way before it ever gets there, so we'll just go ahead and drop down to the lower time frames. I don't think I have anything too crazy about the XY today, but right now this is a 1 hour time frame. You can see we're trading in this range right here, more or less. So I'm basically just looking for some sort of deviation play where we see DXY push up, come down. I don't need to redraw this; it's right there. But you see this. So basically, just push up, come back down, retest, and then first target midpoint, second target the range low. So that's what I'm looking for. And I guess if we see something in the opposite direction, kind of same thing, get a push down here, reclaim, retest, and then target, 1, 2, so on. That doesn't mean that the dollar can't just do something like that, or conversely, something like that. Those are obviously potential moves, but I would be looking for just the deviation trade for now, just especially given that we are in this kind of tight what's it called? Range.
You're a fucking idiot.
Because this range is, like I said, 1 hour chart, so this isn't too crazy. I would be looking for the deviation trade just to push above this high, even if it's just like a little wick, a liquidity grab, and then a sizable reaction. If we start seeing like a push and then this kind of trickle down, I'd be less willing to fade it, because easily it could just be like a dip back in and then continuation of that trend. So I would want to see some sort of aggressive move down. Like I said, maybe a wick and then a push down, and then look for some sort of retest into whatever supply was created, or, whatever imbalance may have formed, maybe even just a retest of the actual range high and then take it down. So nothing too crazy. That's just because we had this pretty steep drop. Because we got a lot of imbalance here, but the steep drop doesn't leave too much price action to work with. So I'd be focusing on this range for now in the short term, but obviously would be eyeing this area if we got a little short-term dollar strength and into this supply, potentially look for a fade. back down maybe to retest this range high if it does actually leave it. Maybe I'll go up a little bit. But yeah, higher time frame. These areas are of interest just because you can, pretty clear higher time frame areas of demand. And you can see this one right here. So we had this high, and then we had sort of this counter trend because again, this was clearly bullish uptrend. So we had this counter trend. Let me get rid of this one. I don't know why that's there. So we had this counter trend. Whoops. This way, right? We had a high, low, high, lower low, lower high, lower low, and instead of making I guess you could base it off of this too, but instead of making a lower low, we made a higher high up here. So you could say this is where we were going to make the lower low. It's a little bit confusing for this price action. It's not exactly clear, but we pushed down, and actually I can't tell. These look like equal lows right here. But instead of making that lower low, right, we pushed to make this higher high. So you could consider this the area of demand of interest. And as you can see, price did react pretty aggressively to that. So I guess that gives you confidence that it is somewhat a reliable area of demand. Now that being said, it's already been tested. So take it with a grain of salt. If we do come back to retest it and maybe pull any additional liquidity there, definitely possible, but always be a little hesitant when you have a first initial reaction, just because you never know how much liquidity is actually left in that area of demand. If it's been tested once, maybe that got everything, who knows. It is a sizable reaction though, so definitely possible. But yeah, we're still at the upper bound of this range, so getting down here, definitely could happen in a couple days, but I would be eyeing this deviation first off, and then maybe if we dip back into, let me zoom in a little bit here. So maybe we dip back into this area of demand, right? That higher time frame that I just showed. And then we get that same thing that I was talking about where you just dip below, grab any of that liquidity, reclaim the range, and then retest and then continue higher. So yeah, that's in a nutshell my thoughts on DXY. Let's transition to Euro USD. Again, got kind of range going here. Had a pretty sizable rally, really. I think that the Euro probably could carry a decent amount higher just because of the momentum right now. Especially with energy dropping, that's definitely relieved a lot of the pressure, especially because natural gas has kind of collapsed a little bit, at least from its highs. That's going to relieve a lot of pressure from the EU in general. Doesn't mean they're out of the woods, but they got a lot of issues, and long term I still think that the Euro is probably going to struggle to hold against the dollar. But right now the momentum is against the US right now in terms of the currency, because you got inflation surprising to the downside and the Fed potentially moving to a more dovish stance. Who knows? They're still pretty hawkish. We got Fed officials. I think one of them, I can't remember who it was, maybe Williams or something. He said that we may get to a terminal rate of 5 to 7%.
Not crazy.
Which is wild. Now this could be them just saying things, try to scare the market to get price action to move the way they want to tighten monetary conditions. Who knows? But that still is something you need to keep as a tail risk. Keep in mind as a tail risk. But the trend right now for Euro is up, and I still would be, because we've had a pretty aggressive move up. I still would be interested in taking it short on some sort of overextension. We cleared this right buy side liquidity and haven't really retraced that much. So maybe if we actually, let me draw that again. Now we did just right now get below it, so you could consider this potentially resistance, and it does line up with this midpoint, so I wouldn't be opposed to looking for some sort of retest and then taking it down. It wouldn't be that great of a trade just because this range isn't too large, but taking it down to the range low, possibly into maybe this area right here of demand. I do like it that it's resting right below these relatively equal levels. So you just get a run of that liquidity into this area of demand, and then you push like that. This one looks retarded. What the hell's wrong with that? Get that in there.
And we say bye-bye.
Yeah. Or obviously we could get down into this area of demand. Don't really have a strong opinion, but I'd want to see the reaction, I guess. Though I do think this is an interesting level. I would definitely keep this on your radar, especially just given what I just showed about price potentially deviating pulling liquidity from here, and then I want to see reclaiming of the range, and then depending on how aggressive the reaction is, I don't want to see like a little trickle up, you know, especially because if trickle up, you might just want to take a short down into this area demand. But if we see a nice reaction to put it back into the range after that, then I might be interested in taking it long to break a new high or short-term high. Then higher time frame, you still got this area right here to look out for. That might just be a temporary relief, like you get price up in here and then just pull back just because from it being overextended and then continuation. I don't necessarily, I mean, I guess I got this idea here. This isn't an order I have placed, but it's a potential idea to take a short. But I don't, you know, the tides are shifting right now, somewhat for the euro, so I'm not necessarily looking to fade to higher time frame levels, which this kind of is because it's a 4-hour chart. So I might be just looking for shorts on a scalp from a scalper's perspective of just taking it down to maybe this level right here, like right where this arrow is. So literally, whoops, yeah. So literally just taking it down. You know, whatever it is, it busts this buy side liquidity, grabs maybe some extra orders from this area of supply, and then just gets a little bit of a retracement into this area to kind of retest this range that it's leaving, and then a continuation. But yeah, I'd still, for the most part, I'm kind of just focused on the lower time frame trades right now for some of these, just because everything is a little bit more uncertain, even though I do think, like I said earlier, that the euro potentially has some room to go higher, especially if this narrative around the US getting, or the Fed specifically, getting a little bit less hawkish, but we'll see. So anyway, just looking for, in a nutshell, some sort of range deviation, continuation, or the reverse, range deviation, come back into the range, and then tag the lower bound, right?
Yep.
Okay, let's transition to, we got Aussie dollar. Yeah, it's another pair I don't really necessarily have higher time frame opinions on, especially just because everything with the USD cross right now is a little bit, it entirely rests on just the Fed and how they're going to tackle inflation and just whether or not inflation is really headed in the right direction. So yeah, so in that sense, I don't know, I'm just not really necessarily that interested in playing this higher time frame. So I probably would focus just on the lower time frames, which I'll get into right now. Whoops. Okay, so we got this range right here, right? And we are just now trading below the midpoint. We were clearly in an uptrend. I mean, just with the whole dollar thing kind of just collapsing over the last few or couple weeks because of the inflation numbers and everything. So we had some Aussie dollar strength, or Aussie strength, I guess. And now we're starting to have this counter trend retracement. So basically just looking to play this as a just casual supply demand strategy where, you know, we're just making these higher or lower lows, lower highs, pulling liquidity from whatever supply is formed. So right now this is the swing high. So I'm looking for some sort of retracement into this level, and then just a continuation to make a lower low and trade into some higher time frame level of demand. Possibly this area right here, right? Because you could say this, you know, let me back up a little bit. You know, so we have this range right here, right? So we could just be, now that we established this new range, coming back to retest that range and ultimately, you know, reclaim it and then continue. So I would be looking to short back and down to this region, maybe bust through this sell side liquidity right here, you know, because this is kind of where this range that we're in right now started right here. So you could target that level, but initial target, because the risk to reward is still fine, you know, over 3R. Just looking for a lower low. But yeah, pretty simple play, nothing crazy. Whenever you got these counter trends, you don't want to overthink it. The supply demand works, you know, usually pretty well. I mean, watch, you had this high right here. Whoops, my drawer went away. So we had this, I guess this was the high, right? But whoops, what the hell's going on TradingView? So we had this high and made a low. We failed to make the higher high, right? So this was kind of our area of supply. I guess you could, I don't know, I usually base it off a sell candle. Didn't quite get there, I guess, with this one. But you could also base it, actually, no, this would be based off the, let me go to the higher time frame. Maybe 4 hours a little clear. Yeah, I mean, it wasn't perfect. I guess I'm just looking to see if this traded perfectly into like some sort of supply, but doesn't really matter because right here is basically where you would confirm that we're kind of headed south, I guess, because you're starting to break these lows, these swing lows. So we break them right here. So pretty clearly at this point, especially because you break this low, right? So this wick may establish a new low right here. So you could say that that is the break of structure that led us to, let me get rid of some of these. Come on, get out of here. So that was the break of structure right here. That signaled right here. So break of structure and pushed higher, had a pretty strong drop. So this was our area of supply, came back in perfectly into it, didn't break that high, consolidated a little bit just to grab that liquidity, and now we're heading lower. So basically just looking for that trend to continue. Even if we make a lower low right here, still would be interested in seeing price come back into this area to continue that trend, and then ultimately to another lower low. But yeah, that's pretty much it. I'm not gonna spend too much time on this. Let's keep the ball rolling. So what is this? The pound dollar. Oh, 3-day. Actually, we'll do that real quick. So you can see that we recently broke this long-term trend line. I don't trade trend lines, but still retail does, and it can be somewhat helpful just to establish trends.
Totally.
But we broke through it, right? So generally when that happens, you got a lot of retail traders that are going to be looking for something like this, like a retest of the trend line, and then a continuation, to fund their Lamborghini fund.
You're a fucking idiot.
But I would be more interested in looking at. I want to see price come back in and break that trend line, break below it, and then maybe continue higher. Again, this is higher. This is a 3-day time chart, so when you're looking at price action on that scale, it definitely, for currency specifically, rests on, what's going to go on with all these interest rate decisions and, the Fed and the UK. But I still, just from a technical perspective, I would be eyeing this area right here. And I do like this kind of flip-flop candle. That's often the sign of like institutional buying, where you just have these like, flip-flop, giant red candle, giant green candle, no real wicks, just real push up. So somewhere in this region, this is a huge range. Again, 3-day time frame, so that's a huge range to operate within. So I'd want to see a reaction first, and then maybe leaving that trend line, getting out of that trend line first before taking it long. But let's get down to lower time frame. Okay, so you can see that we busted this buy side liquidity, kind of just consolidating, nothing super crazy. We traded right here into this higher time frame supply, right? This we had a range going and then just drop. So potential a lot of liquidity left in here that this grabbed right now, but we didn't see a huge reaction, right? So we didn't go down super far.
That's what she said.
And now we're headed back up to potentially, I don't know, maybe you pull more liquidity. I would be eyeing to see if we just consolidate right here and show signs of distribution, right? Just constantly pulling liquidity from this area, and in which case, maybe we get a range going, right? Like a smaller range, tighter range. I guess you can consider, yeah, maybe this is the range. And so, like with a lot of these trades I'm talking about, I would just want to see the deviation, right? So maybe we trade all the way down here and just kind of operate in this range, and then I want to see the deviation, come back into the range, retest, and then take it short. Or possibly the opposite, you come down here, deviate, get back in, retest, take it to the top. So that's right now what I'd be looking for, but I would be cautious of signs of distribution because we are in this higher time frame supply, and we already showed a little bit of a reaction, nothing super crazy, but still we didn't really get that far into it, right? So maybe there's a lot of leftover orders in this area, so maybe we just get a little bit higher, continue to pull liquidity. And then if you continue to see these wick reactions, right, even if we have some wicks that get higher, like a higher high, I still would be, maybe viewing that as distribution, and then looking to see price come back into this higher time frame area demand, anywhere in here. I have these zones mapped out just because, we had this uptrend, counter trend, right? So we're making high, low, lower high, lower low. Actually, get rid of those. And eventually we made this low, and we traded back up here. Didn't break this high, right? And then we traded to a low, but we didn't make a lower low, and this low right here is what led to this new high breaking structure, right, of the counter trend structure. So that's why I kind of mapped these areas out, this one specifically, but really this whole region of like selling to buying. Now, it doesn't mean we can't trade lower. And again, I'm not really looking to, I don't like how well it lines up with this trend line, even though that could work out just because, again, like I said, retail just likes to wait for these trend line retests and then take it long. And, you know, you could view that as like a positive because it's confluent with this demand area. But still, I'd want to see the reaction first, just because I don't like trading off of trend lines. But yeah, I guess in summary, just looking for some sort of distribution potentially in this region, even though I'm not opposed to seeing the pound strengthen against the dollar in the short term. But even with pound strength, we could see some distribution that just pushes it down into this area before continuing higher. And clearly we have some level of liquidity here. So just what the hell? So yeah, we just keep that in mind. But like most trades, just try to establish some sort of range, right? So we got our range right here, and just look for deviations in and out of the range, retest, and then just take it down to the range low, or if it's the opposite side, take it up to the range high. Got it?
Yeah.
All right. Next pair. All right. Sound like a broken record. This is a pretty, I guess, a clear example, I suppose, of a, just a range. Just looking for a nice deviation because we had the big run up right here, right? Big push, made it up to these highs, and then we have, pretty meaningful lows, just clear range, right? So I'm just looking for, you guessed it, a deviation, reclaim, retest, continuation. And you can't see on this time frame, I'll get down lower, but it does kind of line up with this area of demand. Now, it's not technically a higher time frame demand because we're on the 4 hour, you can't see it, but it doesn't mean it won't work. Let's see, yeah, you can see it on the 1 hour right here. So we have this push up, small consolidation, and then another large push up. So definitely has some liquidity, some orders left in here potentially. And again, it lines up nicely with this, inefficiency, right? Because we had these lows established that left a lot of inefficiency in this area, and we're dipping right down right now. So I am eyeing this. I want to see, I'm not just going to take it long off of, some entry in this zone. I want to see the reaction and reclaiming of the range, right? Because we could still have orders in here, but maybe there's more selling liquidity right in this region that just pushes it down or keeps it in this range. And so I would prefer to see price come down, get an aggressive reaction to push it back into that range, and then look for some sort of retest. Even if we get like a huge reaction all the way up to here, I would still maybe be interested in taking it long off of a retest of that range. But, we'll play it by ear, but that's what I'm eyeing right now. Nothing too crazy. Yeah, I think that does it. We'll transition. It's pretty self-explanatory. All right, what do we got here? We got G-Swiss. Let's go 4 hour. Okay, let's map out this previous price action because we are in an uptrend, right? Most of the British pound pairs have been ever since the gilt market fiasco, right? This massive capitulation that kind of just transitioned the whole trend, right? Because we were major bearish, and now we're, in this month-long plus. I mean, when did this happen? September. Yeah, so pretty long. I mean, over a month of a bullish uptrend, and now we're in this counter trend, bearish counter trend. But this could be the transition, right? Because we did trade into demand, and the reason I outlined this was because uptrend, right? Counter trend. And we had these highs, highs, lower lows, lower highs, lower lows, and then this low right here. And then we got to this level, and instead of making a lower low, we made a higher high, breaking the structure. So this is the area of demand, and you can see we perfectly traded into that. So clearly an accurate level of demand. And now we are headed, and now we are currently headed higher. Doesn't mean we're not going to get stopped right here, although I would love to see it run the liquidity of that, god damn it, this area right here. So a push higher, and now if we get back under, retest, then maybe take it to a lower low, shows that we maybe have some weakness. But given that the trend is up for now, I wouldn't be surprised in the slightest if we just make a new high. So looking for pullbacks into area demand. And as you can see, we are on the 4 hour. We got this, what looks like a kind of institutional flip-flop candle, like I call it. So just straight sell to buy right here. And we are pushing higher. So I would be interested in seeing a retracement into this level. I think it makes more sense on the 2 hour, because this was kind of cutting the zone off, but I'll get down in a sec. But you trade into this level and then continue higher. I really do want to see it run this liquidity. This just looks prime for running liquidity and retail stops. Let me get down to the 2 hours so you can see what I'm talking about. Yeah, so right here, this is what the zone was based off of. I suppose you could base it off the 4, or even this whole really area right here of selling candles to the buying that led to this new high. But I don't really like how big this range is. Doesn't do much for me in terms of risk to reward. So I based it off the 2 hour. Doesn't mean we won't see some sort of reaction just right here and then continuation. But, you know, you miss some and it's no big deal. It happens. But yeah, essentially that's what I'm looking for. So some sort of pullback. I'll get actually the 2 hour makes more sense. Yeah, so some sort of pullback into this region and then just run that liquidity. This could be your target 1, and if you feel like holding it for an extended period of time, you could have this target 2, but I would imagine that, you know, once we get over this level, we might see some chop, and, you know, if you want to stay in the trade that long enough, go ahead, because I think there's a good chance that it does reach this, but at that point, I don't know, personally, I would probably just wait for a new trade, so just probably get out right here if and when it gets there, and then look to see how it reacts, if it, you know, gets below this level, and then continue short. So, you know, basically after it gets to this level, I want to see how it reacts. If it is willing to hold this level, you know, it just consolidates around here, and then finally you get like a meaningful move, and then you head higher. So, target 1 could have target 2, but realistically, I'd probably look at that as 2 separate trades. But for either one, looking for a retracement into this area of demand, and then continuation higher. Yeah, that does it. Let's transition to GJ. It's kind of a similar, well, I guess it's a British pound pair, so it makes sense that it would be similar. But so I'll just map out this this area of demand, right? Why is this the area of demand? So we had this downtrend. Is this the same gilt market fiasco, right? That just transitioned, kind of signaled the bottom, at least for the time being, to push things higher. But this was the high that we had to break, right? So what was the low that led to the break of this high? It was technically this right here, right? Because that pushed us here. Oops. Get rid of some of these. There we go. Yeah, so we had this counter trend, right? And this was the low. And then we pushed higher right here. So we didn't bust here yet, but at this point, you would assume, because we're in this counter trend, right, that we would be making a lower low. But instead, we made the higher high, broke this structure, and then eventually broke this high all the way up here. So this was the area of demand that I mapped out. And it's a pretty, you know, whenever I see these really small ones, you always got to be a little cautious. But the risk to reward is so good because it is such a small zone that it's often worth taking. And it worked out so far. So you got this perfect dip down into that area of demand, and we haven't seen a crazy reaction. I guess this is kind of, you know, meaningful, that candle, but we are in a straight line up, but we are now trading into this potential area of supply. So we could see one more leg down into maybe like this area right here. I wonder if that's a little bit clearer in a lower time frame. Yeah, I don't know. This could act as a demand. The only thing I don't like is you got these kind of like equal levels right here, or relatively equal levels. So a lot of liquidity potentially to run. In which case I'd probably be looking for, you know, something like that, and then come back up to take it long. But we did trade into somewhat higher time frame demand right here, right? So it's possible that this is the short-term low that eventually leads us up to a new high. We'll have to kind of gauge this reaction to see if this ends up being a reasonable supply zone. I guess while I'm here, I'll outline why this is supply. So, right, we're in downtrend, then we had our counter trend uptrend. And we had a high, lower low, lower high, lower low, lower high, lower low, lower high, right? But this was the counter trend, and instead of making a higher high right here, we made the lower lows down there. It's kind kind of messy now. But so right here, this is the buying candles that failed to make the higher high and instead led to this low. Jesus fucking Christ. So this was the area of supply. And you can tell we already got a reaction right here, and I guess to a certain extent there. And actually right here as well. So definitely a lot of liquidity left in here. This was probably the time to really capitalize on that clearly, because it led to the lower low. Got this dip, come back in, and then headed down to the higher time frame demand. So I don't necessarily want to view this with the same conviction as other levels or other zones. But still, if we are consistent with this counter trend, it is consistent with that counter trend. So we could be pulling liquidity from there and then headed to a lower low. But given that we already traded into this, I would say questionable higher time frame demand, but still we traded into it. And so in that sense, I wouldn't be surprised if we started making higher highs, higher lows, and eventually taking out this high. Let me get rid of some of this stuff. Yeah, and so this price action is kind of messy if you're looking for a demand zone, for a pullback. So say we are going to make higher highs and higher lows. We can just kind of do the same approach that take the same approach that we've been taking. So right, we're in this counter trend, right? Had this low, and right here we had the next high. Didn't break any of these highs. Came back down, and I guess technically we haven't really broken the structure of breaking this high, right? But we definitely could. Yeah, I don't know. I don't really like this messy price action. It doesn't really have any clear demand zones in my mind, so I'm not necessarily going to have that strong conviction in terms of a pullback and taking it long. I guess you could just base it off of the actual low, somewhere around here, right? So pull back into this area and then take it long. But yeah, I don't know. To each your own. You'll figure it out. Yeah, I don't know. I think it's enough with GJ. I clearly don't have super strong opinions about it, but hopefully that helped. Let's transition to our last Forex pair. All right, so this is USD JPY. Another one of those ones that's been absolutely clapped with the dollar weakness. You can see just this huge drop right here. Right, so a lot of imbalance technically. So we could see some sort of retracement into these levels right here, right, to fill all this imbalance. But right now we are range bound for the most part. Maybe we could even just extend this range. So at the moment I am looking for a deviation. We're literally at the midpoint right now, so nothing, I guess, too actionable unless you do play the midpoint. Could just be looking for, reclaim of the midpoint and then take it to the range high, or the opposite, a rejection of the midpoint, break these lows, then come back for the retest and then take it to the bottom. That's definitely a potential trade. Wouldn't be opposed to it, I guess. I'll just play it by ear, but more interested in waiting for price to come back up here and play out with some sort of deviation. Especially, whenever you have these big imbalances that could lead to a range, the deviation trades are usually pretty solid, I found. That's why I'm, I guess, more inclined to take those. Let's see. Yeah, the yen has been extremely beat up. That's no shock to anybody. Everybody who's been watching currencies has known that the yen has depreciated ridiculously this year. But that does leave a lot of room for a big retracement, kind of people changing their opinions a little bit instead of being so short yen, just transitioning out of that trade a little bit. So we could definitely see an extended, extended strength in yen, especially with the dollar, if this narrative around the Fed getting more dovish continues. So in that sense, I think longer term we could, well, I shouldn't say longer term, but medium term, we could still see lower lows for the dollar yen, but this is a pretty aggressive move. So it's hard to say if we're going to see a huge leg down. So like most of my trades in Forex right now, I'm kind of keeping it short time frame based. Hence my focus on just this shorter time frame range and just looking for these deviations. Yeah, so that's pretty much it. And then obviously, like I mentioned, potentially playing like these midpoint trades, just seeing how it reacts. Like if we bust this high, right? So price goes up here, then look for the retest of the midpoint to take it to the range high. And if we bust through these lows right here, like this, then look for the retest of the midpoint and the range low. But with these midpoint trades, though, I would keep your stops a little bit wider. So target, obviously, the range low. And I would probably just shoot for 2, just because you do need some breathing room with these midpoint trades, because there's usually a lot of volatility around these areas, right? But yeah, I don't know. If you don't like the 2R trades, which I'm not usually the biggest fan of, don't take it. Wait for the range deviation trade. But yeah, that's more than enough on dollar yen right now. So let's transition to our last one, Bitcoin.
My man.
Now, everybody and their mother is bearish on Bitcoin, which, you know, kind of the contrarian in me is looking for longs potentially, but I still am not, you know, I still think there is a lot of room for Bitcoin to go down. I mean, who knows what else is going to unfold with the FTX craziness and whatever contagion problem, you know, all of a sudden manifests itself and whatever. But even so, I think the threat is more just like an unfair association, because Bitcoin is crypto and, you know, crypto bad now. It's kind of like how people are viewing it.
Yeah.
But it doesn't necessarily really affect Bitcoin, especially given that FTX didn't really have that much Bitcoin on its balance sheet, so it's not like they're going to sell a bunch. But the recent price drop right now, like all the way down to 16K, is dangerous for miners, because they were already, a lot of them, kind of underwater in terms of profitability. But now that Bitcoin has dropped even more and the hash rate is still like at all-time highs, they are really struggling, probably, you know, negative right now or not profitable. So a lot of miners are potentially going to have to sell a lot of Bitcoin, or I guess ASICs, off their balance sheet. And that could be a major headwind for Bitcoin going forward. But I was recently looking at some on-chain data, and Bitcoin hodlers of 1 year plus is at an all-time high. So that number keeps going up despite this. And I checked this after the FTX thing. So even in the face of this craziness, people, you know, hodlers are adding to their Bitcoin supply. It's at an all-time high. 66.8% or something like that of Bitcoin supply has not moved in over a year. People are still accumulating, and that's, like I said, a record, an all-time high. So, you know, if this kind of stuff doesn't get people to sell, like what will? So in that sense, I don't know how much lower Bitcoin can go. I still do think that we'll get like way higher time frame here. I have these levels mapped out because now that we broke this range, right? I mean, we were in this range for a long time. I mean, when was this? This was from June all the way to November. That is a huge amount of time to be in a range, and now we broke it. So I don't see that being, you know, nothing. I feel like we're going to establish a new range, and this is just kind of basic stuff, nothing I wouldn't, you know, view with any certainty, obviously, but this is just the, you know, this range taken down to this level right here, right? So this would be, if we had this same level of range, it would bring us down all the way to around this 12.5 level, which lines up pretty well with this area of, you know, this previous range from a long time ago, an area of demand. Because as you can see, we have a huge amount of imbalance right here of just pure buying, no selling. So to see, I like, it wouldn't surprise me in the slightest to see Bitcoin kind of fill that imbalance and just stay range bound in this area for some time, maybe until like the macro picture really changes. So that is what I'm open to right now. I'm really considering this. I'm viewing Bitcoin as potentially headed lower, but not that much lower. I mean, I guess it's still, I mean, how much is it? It's probably a decent amount, to be honest. Yeah, so potentially another like 25-30%, I guess, which is a decent amount. Although I guess if you're familiar with Bitcoin, it's pretty common to experience those kind of drawdowns or volatility.
Yeah.
But yeah, so basically I'm viewing Bitcoin as potentially showing continued weakness, especially with everything going on right now. I mean, we've got the FTX stuff. That's just part of the equation. Obviously, you still have the macro picture of us heading into a recession and the Fed still raising rates and all this craziness. So there are a lot of reasons not to buy risk assets, which unfortunately Bitcoin is considered. And having that line up with a lot of these technical factors, like it just breaking out of its range, And you have all this kind of fluff right here that it really could fill into this range. So that is what I'm eyeing right now for longer term. So, I guess in a short, I'm just bearish on Bitcoin temporarily, but not super bearish. Like I'm not honestly opposed to accumulating spot. I think after the FTX thing and me looking into some of the on-chain data, I started my dollar cost average into Bitcoin. Like I said, it could have a lot more pain to go, but I think after some crazy catalysts like this, if Bitcoin can't, because all things considered, Bitcoin's trading pretty well, given everything that's gone on in crypto with Luna collapsing and FTX collapsing and all this stuff. 16K is like in some sense surprising. Like you almost would think it'd be trading lower. So if bad news doesn't really take things down, that's often a good sign that maybe it is time to start accumulating. Now I still think this is a long way from being a higher time frame macro bottom, because usually you see a lot of accumulation in a range in a macro bottom, right? So if we look at the past, right? So this was the bottom and we were in a range, right? So it's not like you have to buy as soon as it gets there. You'll usually have time. Like once you kind of feel the bottom is in, you'll have plenty of time, because this was, you had this huge drop, right? And what is this? This is December all the way until March. So you'll get several months of accumulating, presumably once you actually have that macro bottom. So I am eyeing this whole range that we're now entering as a good opportunity to potentially start accumulating spot, but I still am completely open to it trading to 12,000, maybe even lower. I mean, who knows? Maybe we get all the way to 10,000. I would be surprised if we traded below 10,000 for an extended period, but obviously anything can happen in Bitcoin world. But with all that being said, let's just go ahead and get back to the lower time frame. Now that I got all that nonsense out of the way. What do we have? So 1 hour. So I would like to see Bitcoin trade a little bit higher for me to get some sort of short, like whether or not that is, like a getting into this range, rejecting it, coming back, retest, and then heading lower. But I also would love to see, honestly, it get back all the way into this level. So I got to get back to this higher time frame again. So that's just this previous peak over here, right? And you can tell that was a significant level. I mean, we collapsed down, found support there, and this was a lot of liquidity entering the market. So I think going forward, that could act as a significant point of resistance. So we'll get back down to the lower time frame. So that's why I mapped it out. Again, it's the red line right here. So I would like to see price Bitcoin come up to this level and maybe find resistance there. What the hell was that? Same thing, just treat it like a range high. I want to see the reaction. And it also lines up pretty well with this area. Again, it's like a flip-flop candle, right? Kind of a sign of like institutional selling, or at least large player. So it lines up pretty well with this area of supply. Like really perfectly, to be honest. So yeah, I guess you could play either. Just price coming back all the way up into this level, pulling liquidity, and then continuing lower. Because I would like to see that. Not really interested in taking any longs on Bitcoin, although, I definitely will remain nimble and potentially look for scalps. I suppose you could look at like this area of demand right here, right? Price trades down. Oops. Trades down into here and then continues higher. But yeah, not trying to get overly bullish unless it is a scalp trade for Bitcoin. So yeah, I guess to summarize things, just really ideally, I would love to see Bitcoin trade higher into one of these areas so I could short it back into this range. Because like I said earlier, I do think that Bitcoin is a lot more downside risk right now, and hard to see, just given where we are in the cycle and everything going on, that this is the ultimate bottom around whatever is like 15.6. So I would be expecting it to probably go lower. But yeah, so in that sense, that's why I want to see it show a little bit of strength, because the higher it goes, the more room it has to go down, in my opinion. But that, I think, is all I have for you today. I hope all that was helpful. I hope you learned something. And as always, stay happy, humble, and most importantly, solvent. I'll catch you all next week.
And we say bye-bye.